Hey traders, Raghee here, and in this recap video we're going to talk about time frames and the importance of understanding in this current volatility what we want to do in order to better keep a grip on the higher price movement that we've seen. And what you're going to notice I'll do is I'll go out to a longer term time frame. The longer term time frames can absorb higher volatility, unlike a 1 or a 3 or a 5 minute chart. Now, this layout that you're seeing right here is exactly what I used to get everybody short this morning on what's known as a switch or a wave reversal. This is one of the alerts from the morning alert chart right in there. And also looking at going forward where the resistance is in an overbought zone. So I'll stick with this same time frame and I'll look for the Darvas levels. You can see here we got it doubled up here. Some of these Darvas levels to say, hey, where is the selling pressure waiting and how can we get to it again? And you'll notice more often I'll be looking at some of these 30-minute time frames. And that might seem like a long time frame, but right now with the way the markets are moving, it's a terrific way to understand why the chop is so much higher higher in volatility than before, and then how we can take advantage of it without getting run over by it. Okay. Now, funny enough, at the very bottom, you'll notice I have a 1 minute chart. Well, Rog, what is that for? Why would we look at a 1 minute? One of the things that we're noticing in this environment, and because a 1 minute volume weighted average price, the VWAP, is very effective at identifying sort of the upper and lower extremes of chop. Look how effectively, now I've got two VWAPs running here, what's known as the MPB and also the standard deviation, okay? And so if you look at the tools that I've got enabled on this chart, and let me just highlight this here for you. And I actually have a version of this VWAP that I make available for free to our members, because one of the things that some platforms don't have is a built-in VWAP. If you're on Thinkorswim, if you're on TradingView, no problem. I do have one available for TradeStation, so everyone can have access to this. So it's just a VWAP, again, MPB, the maximum or the standard, and they're both running here. So notice how well, quite frankly, I think these levels are doing identifying support and resistance. In fact, when the market sold off this morning and we were short, we went right into that lower extreme based upon the VWAP. And I won't always use the VWAP. So some of you might be asking, well, Raghee, why are you using it now? It's because the price movement ranges suddenly have increased, and the average that I use, which is fantastic, 80+% of the time, will run into those very specific times, like in February when the volatility increased suddenly, or recently when the volatility increased suddenly. Because its power is in the historical look back, its Achilles heel is also very often, you'll notice the very thing that makes it great is also the Achilles heel. It's also that look back. So that's something to think about when we're looking at these higher ranges. And I think right now, if you're looking for a tool to help account for the upper and lower range, try a VWAP. I actually have it set on a 3 sigma. Some are set to 2. I've experimented with both. I actually like the 3, and you can see how effective the 3 has been to capture what has been seemingly an erratic range, but I think the VWAP has been doing a fantastic job at looking at the upper and lower ranges. And quite frankly, what would I be doing now? And this is what I just got out of the room talking about. I'd be looking for a short up in this area to take advantage of the move back to the downside. And that does actually sync up with the 30-minute time frames and that Darvas resistance. So think about using the VWAP. I think it'll be very helpful, especially to identify the upper and lower limits of the range in this very choppy, erratic, higher volatility environment.